Good morning, good afternoon, or good whatever time zone you're panic refreshing from. If you woke up today thinking, did crypto just die overnight? Congratulations, you are officially consuming crypto news correctly. Markets cooled, timelines overheated, and somehow both sides are convinced they're right. Today's Daily Brief is about separating price action from narrative noise, because while X is arguing in all caps, the market itself is doing something far more boring and far more important. Let's start with the numbers. Stay with us.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Okay, so the broader crypto market pulled back modestly over the last 24 hours. Total market cap dipped just under 1%, hovering around $3.33 trillion. Sentiment remains balanced. The fear and greed index sits right near neutral, which lines up with what price is actually doing. This wasn't panic selling. This was profit taking, rotation, and some sector-specific exhaustion. The standout weakness today came from DePIN, which led losses across the board. After a strong multi-week run, that pocket of the market finally cooled, with several names seeing sharp pullbacks, which is what happens when everyone decides a narrative is the safest trade at the same time. Outside of DePIN, losses were broad but shallow. Most of the top 100 were red, but not violently so. Bitcoin and XRP both pulled back modestly, but neither broke structure or key support. Volume stayed controlled, and price action remains well within recent ranges. We'll get into why that matters, and why both are showing up in today's headlines a little later in the show. For now, just note this. The majors are consolidating, not collapsing. Ethereum held up particularly well, staying resilient near current levels, while staking activity continues to hit new highs. A quiet but important signal underneath the surface. So what's the vibe? This is a cool-off, not a trend break. A pause after a run, not the start of a breakdown, despite what your timeline's thumbnail artists are suggesting. All right, that's the setup. Now let's talk about why certain assets are in the spotlight today, what actually moved markets behind the scenes, and how much of the current panic is self-inflicted. Let's get into the news, or lack thereof, when we come back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's reset the room, because the last 24 hours have been loud, but the market itself, not nearly as dramatic as crypto Twitter would have you believe. After last week's push toward highs, the market took a healthy breather. Total crypto market cap slipped about 1%, settling near $3.33 trillion. Fear and greed sits right around 49. Neutral, which matters because emotionally people are acting like it's either the end of the cycle or the beginning of the apocalypse. Spoiler, it's neither. The biggest pain today showed up in the DePIN sector. That index dropped over 4%, with names like Filecoin down nearly 9%, Golem down double digits, and most DePIN plays following right behind. This doesn't look like panic. It looks like sector rotation fatigue. DePIN ran hard, fast, and loud, and now it's cooling, while capital waits for the next signal. In other words, not every narrative needs to be traded every single day. Bitcoin pulled back about 1 to 1.5%, trading between $95,000 and $96,800 after last week's run toward $97,000. Key point here, support held. The $94,000 to $95,000 zone did its job. Volume stayed moderate, and this move fits the definition of consolidation, not collapse. Yes, short-term indicators like MACD lean bearish, but this is exactly what digestion looks like after a sharp move higher. Traders are watching either a deeper retest toward below $90,000 or another attempt at six figures if macro flows stay supportive. XRP drifted lower to around $2.04, down just over 2% on the day. No new catalysts, no fireworks, just consolidation. But here's the part people keep missing. ETF inflows were strong. This week marked the largest XRP ETF inflows of 2026 so far, including over $17 million in the most recent session. Translation: price is cooling, institutions are not leaving. One of the more important developments today flew under the radar. Interactive Brokers rolled out 24/7 USDC deposits and announced upcoming support for Ripple's RLUSD and PayPal's PYUSD. This is TradFi solving a real problem: idle capital, slow settlement, and weekends that don't exist in crypto. No press conference, no hype thread, just infrastructure quietly getting better. Meanwhile, Ethereum staking crossed $120 billion in total value, an all-time high, while ETH held firm near $3,300 despite the broader market dip. Network growth, wallet creation, and Layer 2 activity continue to expand. Long-term participants are clearly not shaken by short-term noise. And since everyone keeps asking, No new movement on the Clarity Act today. The Senate banking markup remains postponed until late January, with amendments still being negotiated. Despite what certain accounts would like you to believe, nothing passed, nothing failed, and no bill was secretly signed at 2 p.m. today. Bottom line, this looks like a healthy pause after a strong run, not a reversal. Bitcoin held structure, Ethereum stayed resilient, XRP showed institutional support, and the loudest losses were concentrated in a single sector. Price is calm, structure is intact, emotion is doing what emotion always does. All right, when we come back, we'll see what you all have to say. The Proof of Thought mailbag after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's Friday. The Clarity Act broke crypto Twitter's brain, and my inbox looks like a group chat that discovered leverage for the first time. Let's get into it. First up, is this pullback the start of the next bear market? Yes, a 1% dip. Clearly the end of civilization. Everyone panic, unplug the miners, delete the wallets, and return to fiat. Reality check. Markets pull back, especially after strong runs. This isn't a bear, it's a breather. Next we have, why is DePIN getting wrecked if it's supposed to be the future? Because the future still has profit taking. DePIN ran hard. Traders rotated. That's not betrayal. That's math. If your investment thesis collapses after a 4% dip, it wasn't a thesis. It was vibes. Third one today reads, Bitcoin under $96,000. Is support broken? Yes, Bitcoin is now dead for the 473rd time. Structure is intact. Support held. Volume stayed reasonable. If this is what breaking looks like, I'd love to see strength. Oh boy, so negative today. This one says, XRP is down today. Does that mean institutions are leaving? Yes, institutions famously announced their exit after record ETF inflows. Price dipped. Inflows didn't. Those are not the same thing. Zoom out. Institutions don't trade like Telegram groups. Next we have, is the Clarity Act dead now? Coinbase pulled out. Deep breath. No, it's not dead. It's delayed. Those are different words. Legislation moves slowly. That's not a conspiracy. It's Congress. The bill didn't vanish overnight just because timelines panicked. Next one reads, Trump signing a crypto bill today? Bull run confirmed? This one's my favorite. If X posts could pass legislation, we'd all be billionaires by lunch. No signature today, no surprise bill, just recycled hype with new emojis. Check sources, not vibes. This next says, should I sell everything until the Clarity Act is final? If your strategy is sell until politicians agree, you may be waiting a while, possibly years. Markets price uncertainty constantly. Waiting for perfection usually means missing the move. Look, today wasn't chaos in the market. It was chaos in interpretation. The charts stayed calm. The comments did not. And that's why we're here, to separate signal from noise, even on a Friday. All right, after the break, I'll leave you with a final thought, because sometimes the most important move is doing less. That's coming up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Now, before we go, let's talk about today's main market indicator. Not Bitcoin, not Ethereum, not volume. Yeah, that one. You know the one, the platform we all still associate with a little bird. Yes, I'm talking about X. Because if you believe the timeline today, crypto was simultaneously collapsing, mooning, being banned, being saved, and personally attacking everyone's bags, all at the same time. A 1% dip became a rug. A delayed committee meeting became the death of innovation. And every anonymous account suddenly discovered constitutional law. Here's the reality. The market didn't panic. Institutions didn't flinch. On-chain data didn't scream. Only the commentary did. And that's something worth remembering, especially heading into the weekend. Markets don't move on tweets. They move on liquidity, structure, and time. Noise feels urgent. Signal is usually quiet. And right now, despite the drama, the signal says something very simple. This space is growing up. Bills get debated, markets consolidate, people overreact. That's not chaos, that's a system maturing in public. So if today felt loud, if the timeline felt exhausting, if you caught yourself refreshing charts instead of enjoying your Friday, take the win. Close the app, touch some grass, let the market do what markets do. We'll be back next week, clearer, calmer, and hopefully with fewer emergency emojis. I'm Sen B'Hiro. This was the SENB Daily Brief. Have a great weekend, and as always, stay curious, stay grounded, stay caffeinated. The SENB Daily Brief is a production of Sen B'Hiro Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, Sen B'Hiro. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbhiromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.